high note. Compounded interest, something that makes time in the market so valuable. So valuable that it is the cornerstone of any long-term run portfolio. But timing the market, i.e. when you should change within your asset allocations, when you should entry into new assets, exit out of other assets, that can actually make you pick up a lot of extra performance points that would enter into the compound machine, if you like. Now, how can we do that? I'm happy to introduce you to a company called TenViz and their algorithms built on real-time money flows to predict where assets are going out and where assets are coming in, and thus building their buy and sell signals. TenViz has a great track record for this and have been operating for the last 10 years. Without further ado, let's take a look at how the TenViz engine actually works.
How TenViz artificial intelligence generates short-term signals within long-term trends. Our artificial intelligence-powered platform produces long-term signals, whether it's buy, sell, or short, across all asset classes by analyzing global cross-asset flows. Take, for instance, the sell-off on August 5, 2024, accelerated by the Japanese carry trade unwind. While we maintained our long-term buy on the S&P 500, indicating a 4% upside since May 16, 2024, our short-term buy signal on August 6, 2024, marked by the green triangle, suggested the sell-off would reverse, and it did. Now, let's look at a more recent example, a mid-term sell on the U.S. technology, XLK, dated August 19, 2024. Yet, on September 6th, our short-term signal switched to a buy, indicating that the sell-off might be over. We see a similar pattern with semiconductors and software equity indices. Our short-term buy signals from September 5th and 6th, 2024, suggest a potential near-term bounce.
Here is an example from their website, and mind you, this is an old take, so the current signals are most likely very different from what you see in this example.
Introducing What Moves, a smart tool that helps with asset allocations. This helpful page offers two great benefits. First, this What Moves page tracks all asset classes across major countries on a single page, and second, it displays our predictive signals whether these indices are either a buy or a sell. First, on the convenience side, the What Moves page tracks the performance of the most important markets globally: foreign exchange, rates, credit, equities, factors, and commodities, all in a logical format on a single page. You can customize your What Moves page by selecting asset classes or countries that you would like to follow. To do that, use the settings cogwheel. You can add or remove, for example, smaller countries, say, Turkey, or add less popular instruments, say, platinum in the commodities. Second, next to a specific index we have either a buy or a sell flag indicating whether this is a good or a bad time to invest in this index, based on our predictive analytics. By default, the signals table would display signals that were generated in the last 10 days. You can select the freshness of display in the settings menu, too. To do that, please click on the cogwheel at the upper right of the screen again, and there, you can select either the last 30, 60, or 120 days to monitor fresher or older signals. Let's examine in greater detail how our signals work. Let's look at the example of the S&P 500. To do so, click on the S&P 500 index in the equities column to see it come up on the chart below. There you can see call-out buys or sell signals on the S&P 500. That appeared at various points in time. Use the time scroll to select either a longer or shorter period. Click on the Performance tab to the right to examine the statistical accuracy of signals, long, short trades over the last 2 or 5 years. We display all the common ratios there. To understand what drives these buy or sell signals, you can read the narrative that explains the underlying quantitative relationships and sources of money flows. To avoid eyeballing the gains in the analytics section, you can select to display gains or short gains as arrows with percentage gains or losses. Consider cross-asset drivers using Canada equities as an example. If you click on any signal, below the chart, in the gray box, you will find the reasoning, which provides a helpful narrative explaining the underlying logic of cross-asset drivers reflecting global money flows. For TSX, Canadian Stock Index, you can see that it is very much driven by industrial and precious metals, iron ore, zinc, nickel, gold, silver, which form an important part of the Canadian economy.
Finally, what are the latest signals from TenViz showing us? Well, my intern, Kasper, has made a slide that we have edited to the video, so here we go. Enjoy.